The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to do something a little differently today, folks. We're going to start the day with the news announcement from the Financial Times. You'll notice that Deutsche Bank is in trouble. Wow, they finally revealed it to us as it's trading at $10 and change today, folks. This stock is in such big trouble. I don't know what it means. To me, it's extremely negative, but nobody else cares. So anyway, but we're trading below. You see, the last time we posted this, it was 1205. And you'll notice now that we're below 11. We're around 10.5, as I recall, this morning on big volume. The other thing that's relatively important, whether it means anything or not, is some of our friends here in the TFNN room posted the fact that Credit Suisse is doing a 1-for-10 reverse split. And the only reason they do that is to get the price of their stock up so that the mutual funds can still hold it. Now, if you remember what happened to Citicorp way back in 2008, they had a 20-to-1 reverse split in order that they could still be put on the in the mutual funds and stuff like that. So we'll see if that's going to be something, that'll be very, very important. We'll find out whether that's going to mean anything or not, but usually it does. Not always, but usually. So we'll see what's going on, with that as we go through here. Now, the next one we want to take a look at is this, a major apology here. I don't have a way of checking this kind of stuff, folks, but I have been, not you. I have been victimized by fake news. This chart here of Mercury, Venus, Saturn is all BS. It's fake news. I got it from 3 different subscribers last night telling me that it was baloney, and I realize that now. Norm Winsky was kind enough to point it out to me too, so we'll see if that is going to mean anything or not. But I really believe this thing with Deutsche Bank is very, very important. So it's the largest bank in Germany, and it has those tentacles of all the counterparty risk that is out there, and that's what took down long-term capital back in 1998 with John Merriweather. They had all the Nobel Prize economists. The problem is they had nobody to take the other sides of the trade, and that's part of the problem that we're looking at right here. Remember, we saw that big gap down in the high-grade bonds, not high-grade, high-yield bonds, just the other day, and I think that's also a fact that there's something big out here, folks. I don't know what it means, but we'll have to wait and see. Now, we're going to have Rich Anderson as our guest here at the break, at the 9:30 break, and then tomorrow we have a special guest. Simon Lee will be on talking to us about it, and there's some big things happening in these grain markets, folks. There's extremely wet weather out there. Yeah, wet weather. Boy, Larry, you really got your A game going today. Meep, meep, meep. Judge's ruling. Dry weather out there. They did get some rain in that area, but it's still very, 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 very dry and very hot. Like I mentioned before, we had the hottest May since 1937 in Indiana, and many days were in the 90s. So if that starts coming into June and July and stuff. I can remember 1983. I will tell you, this is an interesting story because I was trading in the office by that time. I'd been on the floor for quite a while, and I was in Dr. Brutman's office, which was right next to Barry. Right next to Barry's office. I can't remember Barry's last name right now. Anyway, there was a trader came in, and he was really in trouble, and he said, I really need to make $1 million. And he asked me, he says, you've made some money before. Yeah, I got lucky a few times. Barry Lynn, thank you very much, Mr. Z. And he said, what would you do, or how would you make $1 million? And I said, this was the weekend of Memorial Day weekend, 1983. And I said, well, I'm very bullish soybeans, and I said, if you really wanted to be bullish, you buy some here, put on 5 contracts, and buy 5 contracts every time it moves up 20 cents, margin, that you can increase your margin, because the margins at that time was real cheap, because, burnt beans were relatively cheap at that time. And as luck would have it, I did not do this, but he did. And this thing took off like a ruptured duck. I mean, it really did. It really made Ricky the Rocket, he was named mid-name Bid a Billion Barnes, bid a million, wow. Bid a million beans, and that's what took off the market, and it went straight up, and he kept going and going, and he got out within 30 cents of the top. He didn't quite make the $1 million, but he made about 750. And yeah, Ricky Barnes is still going strong. He doesn't trade too much anymore. His son does, but he basically fishes down in Florida. Anyway, we will take a look here at some of these other markets. We got to have a break here in about 2 more minutes, but I do want to really talk more about this Deutsche Bank thing, folks, because I really believe when you got a major bank like that in trouble, that's what happened to Lehman Brothers. And we've been pointing this out to you. You remember back in January when they were kind enough at Deutsche Bank, it's trading at $20.75, and they gave you the opportunity to buy it at a 35% discount. Hello, are you kidding me? Huh? Give me a break. Give me a break. That stuff doesn't happen, folks. Just got to pay attention to it. It's really quite amazing. So you got to pay attention to these things. They're really very, very interesting. At least that's what we think. But anyway, the reason why I'm bringing this to your attention is the fact that the news follows the trend, folks. The trend in Deutsche Bank started down a long, long time ago. And that's what happens with these things. I mean, you've got to be able to, be able to see if this is going to be the case. Now, I just don't know if that's going to be the case or not. I'm not sure, but it's very negative. I mean, it's extremely negative because if that bank goes, and it's taken a bunch of puppies down with it, including the Italian banks, and we already know that they have some trouble in that area too. So just keep an idea of what's going on in some of these things, and we'll have a pretty good idea whether it works or not. Who knows? I'm not even sure, but neither is anybody else. So we'll have to wait and see if this is going to be the case here, but we'll notice here. Anyway, that's what we're watching here this morning. We had a little bit of a sell-off here in the NASDAQ. We dropped about, looks like about 35. Let's see, 25, 55. Well, we didn't do much. Drop about 30 points. The S&P dropped some. And but the problem is that we've got these things moving. Well, the Dow Jones dropped quite a bit. It dropped 120 points. Whether that means anything or not, I'm not sure, but we'll see whether it does or not as we go through looking at some of these other things. Okay, now we got Rich coming up in a few minutes, and we have Simon only tomorrow. We're going to be talking about cattle, and we're going to be talking about the corn market specifically here this morning, because we've got some really nasty weather out there in corn. And if it really turns, there's a really great spot to look at it. But so far, the market is not telling us that, and that's a very important point. So let the market tell us. We had this big drop here the last few days. It was spot on, the 3-drive pattern and all these things. So let the patterns tell us. Anyway, we'll take a break here, folks. 877-927-6648. Stay tuned for Rich the Rocket Anderson.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I want to talk about the euro. Rich will be on at the half-hour break, not this first break. But if we'll take a look at the euro here over the last couple of weeks, this is a 60-minute chart. You can see the big ABCD pattern that occurred down there at that 115 level. Last night, we got all the way up to 117.20. And then we backed off. Right now we're down into the 116.60 level again. But what's important here to realize that this last swing that we had between the 29th and the 31st is almost identical to the one that happened between the 9th and 11th of May. So this is going to be pretty interesting what the pullback is going to be. The 61% pullback on this would bring us down 120 pips from the high today, which would come in around the 116 level. But remember, this market is correcting a very oversold condition, but longer term, it looks extremely bearish, folks. But if we turn and get back above the 117.40 today, that would give you some pretty good possibilities of being able to see that the market could rally a little bit more. But this is one of the beautiful things to trade. And you can trade it 24 hours a day, 5.5 days a week. It's more volume, thousands of times more than anything you're going to find in the stocks. And by the way, I wanted to mention this a little bit because I happened to be up last night trying to take advantage of this move here in the euro for my little grandson. And basically, there are two things going on in the world that we don't discuss much. I don't discuss it because I don't understand it. It's called the GDPR, which means the General Data Protective Regulation, hitting Europe and also the United States. This is a regulatory nightmare for some of these people. It's just beyond belief what they have to do. My good friend Tom Hugard, who owns a brokerage firm over in Stockholm, in Denmark, Copenhagen, he basically says it's an absolute nightmare for him. He said it's just they've done absolutely everything that they can do to destroy the business. They really can. Do you realize that now in Denmark that you cannot buy stocks on margin? I mean, that's just ridiculous. That just dries up liquidity. I mean, it doesn't give a counterparty risk, because that's what people do, is they can protect their their investments by hedging. If you're long something, you can sell it short against the box and protect yourself, but that's taken away from them now. These regulations are not very good, folks, and I'm off my soapbox now, and we'll move on to the first question. That long red tape, it's exactly what it is. Let's bring up here the DAX. We don't want to miss it today because we had a really beautiful pattern here last night. You'll notice here that we had the big ABCD pattern complete, right spot on. And what we do, we rallied exactly 250 points. The previous rally was exactly 240 points, but the ratios were pretty much spot on. So it looks like this is heading down also in the market. Whether that means much or not, I really don't know, but we'll see. I wanted to get back to talking to you a little bit about the you take a look at that general data protection regulation, folks. It's really bad. I mean, I'm talking to people over there, and they're just really concerned, a great deal about it. Now, I wanted to talk a little bit about the depth of the market, because when I was looking at euro last night, I was watching the NASDAQ trade because it jumps around like a rabbit. And folks, I can tell you sometimes between I would say between 2 in the morning and 4 or 5 in the morning New York time, you could move the NASDAQ probably 10 points by yourself with a 10 lot. I mean, all the trades there are onesies and twosies. There's no depth of the market after that. So in other words, you can see, the bid and ask, and there's just nothing there. Years ago, when I first started learning how to trade, we didn't have the access to the data that we have now. I had a ticker tape, so I had to hand chart this stuff, just like Jesse Livermore did back in the, the 30s and the 40s and the 20s. And I would keep those, pencil marks, and I did them all by hand on graph paper, and that's how I learned how to find some of these little swings and stuff. And anyway, what I'm trying to tell you is just be really careful here on some of these things, because if we lose liquidity in something, and that's a high probability, not a high probability, it's a probability that if Deutsche Bank gets in any more trouble than they're in right now, and believe me, the way the stock is acting, it looks like it's got Lehman Brothers written all over it. And that's the largest bank in Germany, folks. Hello, that's not a very good thing. So just remember to always keep your ducks lined up. The good part is that most of the brokerage firms are pretty safe right now, unless something really, unusual happens. But we'll be able to see if we'll be able to get this thing moving here. Okay, I'm trying to get two things and reading at the same time. Hopefully we'll get this thing done, but we'll have to watch it very closely here as we look at some of these markets. Now, I remembered to tell you again that we will have Simon only on Friday, and we will have Rich Anderson on at the break here. And on Monday, we have a very special guest. Bill Meridian from Cycles Research, Vienna, Austria, will be our guest, and we'll see what happens. Now, last night, a question regarding the crude oil. Last night, crude oil rallied into some kind of report up to that 68.60 level. We've now dropped $3 a barrel down to 66.60. That number that we hit last night was a 382 retracement of that whole move from 72 down to 66 and then back up again, folks. So that's a pretty negative thing. Now it's trying to make a double bottom here, but any move below 66 in the July crude is going to set up a situation for an ABCD structure, taking it down to about 61 or 62 and possibly even into the high 50s, which was our ultimate guess or goal of what we were going to be thinking about in crude oil. So we want to pay very, very close attention to that. It should be something that we really need to watch. That's the main thing. Now, we got the euro is now backed off 70 pips from its high. It's down to this 116.55. That triggers a really nice ABCD pattern, and it should hold right here. So let's keep an eye on this euro right where we're at right now. And I'm just looking at it as a technical basis. Whether that's going to mean anything or not, I'm not sure, but we got to pay attention to it. So that's the main thing that we want to watch. So let's keep an eye on it. Let's see what's going on, as they say in the trade. Okay, let's. Okay, someone's asking questions that I'm not able to answer. We got crude oil got down to 66.60. That old low that we had was at 65.75. So all we've done in the crude is to make a retracement here, pretty much spot on. Let's just get this up here. Yeah, we went just a little below The 61% retracement back was at 66.89, and we got down to 66.64. So we'll watch that one also closely to see if it's going to mean very much or not. That's the main thing that we want to kind of keep an eye on, because we've got some big things happening in some of these other markets related to what's going on across the pond in some of these things. The gold market, we've still held. We're trading in spot gold now, which is August. It's trading at around 13.05. The high was 13.11 last night. We backed off and made a 61% retracement of the previous day's low down there at 13.03. So that's going to be a key level to pay very close attention to, and we'll be able to watch it very, very closely also. So those are just some of the ones that we're watching that should make somebody stand up and take notice. You know what I will do here? We've got a break here, and when we get back, we are going to talk to Rich Anderson of Anderson Capital Management when he comes back on 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson of Anderson Capital Management on the line. Rich, are you there?
Yes. Good morning, Larry.
Good morning to you, my friend. Rich, before we get started on corn, we've been talking here in the den about this situation going on with Deutsche Bank, the fact that they're under surveillance in the Fed here, and the stock has gone from 20 to 10. and it's broken, all major support. Do you hear anything about what's going on over there? Do you know anything about it at all?
Well, I mean, they got to get their act together, right? And
well, they better.
They grew by buying a bunch of different banks. Acquisition, and the systems don't all integrate, right? Mm-hmm. It's like if you have an Apple and a PC, they don't integrate. Only when you're buying companies or when you're buying banks, they aren't always additive. And so they've got some challenges, and they need to fix them. Everybody says it's like Lehman and Bear Stearns, and yeah, they're a major bank and they got major problems. The difference is they're named after a country, Deutsche, Germany, and I do not believe that the government, while they have stated that they aren't going to necessarily intervene, I don't believe that they would allow something with their name on it to go under. So
I agree.
They've got major problems, though, integrating all the systems and operations from all these banks and stuff that they've acquired over the years, and they should have gotten that done ages ago, and they didn't, and they're paying the price.
Now, that's the counterparty risk that people talk about. In other words, all these banks have outstanding contracts that may or may not have liquidity behind them. Is that correct?
Yeah, right. And then the other thing you got going on is, we had a selection recently in Italy, and Five Star and the League were the major winners, and they tried to form a government. And then last Sunday night, the president said, no, we're not going to allow that guy to be the finance minister. They ran on, one of them ran on a platform that everybody gets X amount of dollars. Well, they're not generating that kind of revenue and taxes and stuff. They didn't run on any tax increases. None of the math works, and they want to have their own currency and dual currency with the euro, and that's against the euro. There's just a lot of problems, and they got to sort those things out, and that makes banking all the more complex in the European Union and the major markets that Deutsche Bank is a banker in. So they've got their challenges.
That's for sure. We've got a question here before we really want to talk about the corn market here, but we've got a question here about the live cattle. I'll post a chart here, and it looks like there's had pretty good support down there at 98. We're trading about 103 right now. What's your feeling on the cattle, Rich?
What 103? What market are you looking at? What month?
August cattle. That's what I'm showing as the last
August
price.
Cattle right now are 104.65 up 20. 105.15 is the high. 104.65 is the low. They had a big rally yesterday, Larry. We were up almost the limit. They moved a lot of beef. That's the carcass beef, after it's been slaughtered. And anyway, the shorts got run out, and I think the volume was like 35% greater in the August yesterday, as an example.
Okay, we've got a caller, our good friend from Philadelphia, John. Are you there?
I am, Larry. Good morning, Larry. Good morning, Rich.
Hi, John.
Go ahead, John. Ask your question.
Thank you very much. Rich, I wanted to ask you, thank you for elaborating on the recent price action here on that August live cattle futures contract. I have a bigger picture question for you about that cattle market. People in the trade were all well aware that the cattle herd here in the U.S. has been increased the past couple of years. We know that cattle on feedlots is at multi-year highs, and as a consequence of both, beef production is higher than it's been in years. But what I wanted to ask you, Rich, do you see the supply-demand changing dramatically in the next 12 months, like herd liquidation or export demand, notably possibly China, anything that might be occurring that might lead to cattle prices being not 110-ish, but 130, 140, looking out 12 to 18 months?
Well, first of all, on the China thing of, one day we're saying one thing and they're saying one thing, and that's buffeting all these markets from any ag market, whether it be cattle or corn. The answer to that is no, I don't I don't see dramatic increases in demand. The gasoline prices recently is like having a tax increase to your average person, because your average person needs X amount of gas to go to work every week, and they got to pay whatever the price is, and so it's been like a tax increase. Now, if the oil prices were to come down a bunch, that'd be like a tax cut. You know, Obama was able to ride the wave of a tax cut by cheap oil prices. Now we're getting a tax increase. A tax increase, by the way, just going to the Federal Reserve and banking, is kind of like raising the interest rate. It's kind of like a Fed hike. So while the Fed had been anticipated to do maybe 4 hikes this year, if the dollar stays strong, they're not as likely to do 4. They're more likely to just do 3, one in June and one in September. But the cash cattle were so much over the futures that the futures have started to come up, and that you got the convergence last year. By the end of June, the August cattle were $2 under cash, and this year we think they might even trade par with cash by the end of June. So it's the cash. The cash has been way higher right now. We're looking at a steady cash market this week at 110. There's a seasonality to the demand, but I don't see any major inputs. Now, a major drought in the Southwest could cause people to liquidate cow herd, and anytime you've got some liquidation of cows, then there's additional beef on the market, which would put a 2 or 3 month drag on prices. But I don't see major increases in demand. If you look at the consumer spending and their debt and stuff like that, car debt, you know, I don't see it.
Rich, thanks so much. I truly value listening to you share your thoughts on that topic. So thanks so much, and I'll sign off and look forward to you and Larry talking the grains. Thanks again.
All righty. Thanks.
Okay, Rich, I've posted a chart here of the corn on what the condition of the crop is so far, but we've only got about 30 seconds before we take a break. When we come back, I'd like to go through that with you if we could, because
okay.
you know, Cy's going to be my guest tomorrow, and he is wildly bullish on this stuff. So we're going to be interested to see what happens.
Leaving you to the break, cotton. You just take a look at what cotton did recently. That's what corn and beans can do in another 30 days.
Yeah, that's what we'll do.
I'll wait for the break.
Yeah, we'll have some music, and then we'll have you back on. Rich Anderson from Anderson Capital Management, folks. We'll be back on in just I think I hear the music now, but maybe I don't. There it is. We'll be right back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're going to talk corn here with Rich Anderson. Rich, I posted the chart here about the progress of the corn crop right now, and we're going to have Cy on tomorrow, and Cy is extremely bullish on corn. And of course, we had that hottest May in Indiana's history since 1937. Any feeling here on the corn, and what do you think?
Well, basically, what I think on the corn is that they're just going to light a fire under it, and we're going to reach that point where whatever corn didn't get planted. Mm-hmm. The next wave of heat, this was a very early wave of heat. The next wave of heat will be the one that lights it up. The weather in Lubbock, Texas, is what lit the cotton up, and you saw it go limit up. If you have a cotton chart, you can see what happened there. That's what I believe is going to happen to the grains. That's why Cy has some enthusiasm for them, and I have some enthusiasm for them. It's all about money flow. You had a beautiful call on the wheat to sell the wheat on that ABCD, and boom, it sold off. The money flows out, but there'll come a point where the commercials actually need this stuff, and they know, there's no turning back. The daily need for moisture of corn meets its peak in the middle of July, and so we've had some nice rains in certain areas, but let's look at the weather going forward, and that's going to be the driving force. And I think there'll be a weather event that'll catch enough people short that'll act like the cotton did, and there'll be short covering, and it'll go vertical, kind of like the cattle did yesterday.
Yeah. Boy, I remember some of the markets. I remember, Rich, when you used to come to visit us up in California in Pismo Beach and in Westlake. One of the times we were driving up there through Santa Barbara, and Lake Cachuma was nearly empty, remember? And they'd been in a drought, and you said within 12 months, he said that lake will be filled. And boy, sure enough, it was the end of the El Nino, and boy, that thing just and that, Rich, I don't know, you haven't been there for many years, but it is almost bone dry. I mean, you can't even have boats on it anymore, no fishing or anything. And, that thing was huge, and it's literally, it's really dried up. It's really sad to see it, but, that's the way it goes. So, okay, Rich, one other question. When we're talking about the bean market, and we're looking at the November beans, we have that massive quadruple top up here. Let's put this up here so the folks can see it. I think that would be the trigger to go long is if you get up. Let's just get this up here so we can quickly get it up here. Just 1 second here.
W.D. Gann said the fourth time through.
Mm-hmm. Yeah.
And the safest time, when things go into new highs or new lows, that's the safest time to enter the market often. And you just put your risk in and hold on for the ride.
Well, that's what our game plan is here. We were able to see this move coming in wheat and corn, back off a little bit, but frankly, it's just nothing more than a buying opportunity. And the cotton
Blue
was
Light's special. It's a buying opportunity.
Amen. That's just what it is. I think they have those guys all over the stores nowadays. Anyway, we have another question about the gold market, Rich. Any feeling on gold here? I mean, we've been in this really tight trading range here of about $15 for the last 2 weeks. What's your feeling on that?
Well, I think you were the one that pointed out to me that the gold had been somewhat tied to the euro. And, as the euro's gone down, the gold's gone down. Now the euro's got the Italian situation. And then another part of the players that would normally flow into gold have started using the Bitcoin as their thing of safety, and I think eventually they'll pay the price and find out it was a big mistake. There seems to have been a big seller up there at the highs, a big seller probably central bank of one sort or another that is liquidating some of their portfolio. I think, and we talked about how the silver-gold ratio, it broke a many-year trend, and silver's been strength versus gold since then. I still think that gold has the value, and you buy it on the dips. The QE is ending in Europe. We're drawing down in the United States. One of the ways we draw down, we don't reinvest the bonds. We just let the bonds melt off the balance sheet, and that alone is a huge drawdown. We stopped the QE buying bonds, and Europe is reducing theirs, and so that's a little bit of tightening in the world's cash market, and I think that's the drag on gold. But I think you trade it technically, and I think these dips, you'll find that they'll find levels of support, and then you'll see the money start flowing, and then they'll go back the other way, and there'll come that point where there'll be inflation.
Yeah, the inflation, we haven't seen any inflation for many years. Gosh, when we first started, back in the 60s and 70s, they used to have, the women would be out in the supermarkets with signs, about cattle, and that was when it was about 30 cents cheaper than it is right now, but they're not in the stores anymore, so.
But there'll come a time again, and that's going to be the only way out of the debt for not only our country, but virtually all the countries in Europe too. So they'll figure out a way to get it going, and that's what's going to make the gold worth a lot.
Yeah, I think so. How about the wheat market? You're involved in the wheat. That's been the strongest. It's backed off, 25 cents from the high, which isn't very much, but doesn't it have some really strong fundamentals behind it also?
Yes, it does. But again, it's weather. It's weather in Australia. It's weather in the Black Sea, and these are major exporting countries, and when they have weather problems, the whole world goes up, because if they can't export, then that's wheat that we'll get to export. So these are major weather issues right now. And it's not just here in the Southwest. In the northern spring wheat, the Minneapolis wheat, they've had some issues getting it planted in areas. But it's the Black Sea dryness was what caused that last rally. And every weather forecast, the market reacts.
Yeah. What about the premiums on the calls? Are they exorbitant now for wheat, corn, and beans? Are they building in a lot of?
No, I don't think so. That's usually you can get some pretty good value, and if you only want to play for 60 days, let's say, you can play December corn or November beans with what the Chicago Board of Trade calls short-dated options, and the underlying that you're trading is not the July corn, but the Dece corn. So that's a good way to go. Let's see what the volatility is. Volatility normally goes, volatility in wheat right now is 30%. That's plenty That's plenty. Volatility normally goes up at this time of the year. Corn's still 22. It could easily, in the next 60 days, get up into the 30s also. And the beans, I'm just doing the average. I'm just looking at them. The soybean volatility is 20% also. I mean, that's relative, 20, 21, 22, that's relatively cheap. It's not unusual in the summertime to see 32, and a change of volatility of 10% would change the price of the option a bunch.
Hey, Rich, thanks for joining us, buddy, and have a wonderful holiday, and we'll talk to you soon.
Right.
Rich Anderson, Anderson Capital Management.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we got the NASDAQ and Russell going straight up and the Dow and S&P going straight down. Nothing unusual. We've had a huge rally in the Canadian dollar, 140 pips here. Just recently coming off of a 1.27. The key thing to pay attention to in the news, folks, is what's happening with Deutsche Bank. If they get into any more trouble than they have right now, we're looking at a Lehman Brothers situation. And as Rich Anderson mentioned, that being the flagship bank of Germany, the odds of them going tapioca are pretty slim. So if we get it down around $4 or $5 a share, it might be something to take a look at, because I don't think they're going to let Deutsche Bank go under. But that's my 2 cents it's worth. And we'll see, you know, that's what you pay for, is 2 cents. Anyway, keep a close eye on that. We'll be watching the weather these next few days for a potential buy here in the corn and also in beans, because if you see something like what happened in cotton, you know, we had a 20-cent move in cotton very, very quickly just because of the hot weather coming out of Lubbock, Texas, the home of Willie Nelson and Mac Davis. Anyway, we'll watch these markets a little closely. Keep an eye on that euro, because we've held that 116.50 level so far. That's an important ABCD on the shorter term pattern. We're down about 70 pips, which is very close to the harmonic number. So that's a key one to pay attention to. So these are very, very active markets. So make sure you protect yourself and use a stop, because if you don't, you're basically telling the market that you know more than it does, and then you don't have to use a stop. And the next thing you'll be doing is flipping burgers in the old McDonald's chain, and you don't want to be doing that for sure. That's not any fun at all. So we'll watch it closely as we go through here, you know, looking at some of these, because it's very exciting. By the way, the bond open interest in the bonds dropped again substantially yesterday. So we're seeing another short covering rally. How much it's going to go, you know, might go make new highs, but I don't really think it's going to mean a lot from that level. But we'll have to, you know, keep an eye on that, because it certainly could without too much trouble. Anyway, we'll watch these, and then we're going to have a break here. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!